The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. We saw a bit of a weaker tone to start off the trading week, the final week of February in the grains and oilseeds. Moderate losses, corn, soybeans, wheat. A strong day in cattle futures. Nice to see that. Now we'll have to wait and see if it reflects on the cash trade this week or not. Plenty to take a look at. Joining us for market analysis, Corey Bratlin with agmarket.net. Corey, thanks for being here. And I know for you and me and many folks across the U.S., we were chatting about this before we went on the air. Nice to see the temperatures warm up from where they have been here as of late, my man.
Yes, definitely is. You know, that 20, 25 below mornings up here in South Dakota and being, 10 below for a high, it's kind of, we're used to it. But no, it's nice when we've got some 50-degree temps out here now. We actually had a little rain shower come through this morning. So that's first precip we've had here for quite a while. So very welcome up here. So
yeah, very welcome. And hopefully it just gets everyone in a better mood. Maybe it gets them in the mood to do some marketing. I don't know. Monday, maybe not so much. Just felt like a money flow type of day in the grains and oil seeds, kind of risk off. I mean, I didn't see anything major. It just felt like the trend was down. What do you think?
Yeah, you're right, Jesse. The overall, this market complex, when you're in a bullish trend like we had been on corn, kind of more sideways, a little friendly on soybeans, you got to feed that bull every day, to continue to see that buying come in. Well, it's not that we just kind of running out of bullish news. The weather is turning pretty good for Argentina. They're going to be catching some rains. Brazil, I saw them here at the end of last week. They're right on last year's pace, or really very close to the 5-year average of soybean harvest, along with the safrinha corn crop. Their double crop corn crop in Brazil is right on pace of last year's pace, which was a very fast pace. So that's kind of between that. I think the funds are just starting to maybe pull a little bit of money back, maybe off the table here for the short term.
I wonder, thinking of the funds, it sounds like they have greatly reduced their long in soybeans, which I found interesting. I don't know if that's a precursor of what might be to come in the corn market, for instance. They're very long in corn. I mean, what do you make of some of the most recent fund data we've seen, Corey?
Yeah, the funds definitely were sellers, or have been the sellers the last couple of weeks on soybeans. They were pushing 50,000 plus contracts long. They've reduced that now down as of last Tuesday and Friday's commitment of traders report. They were, I think, long around 16,000 contracts. So greatly reduced it. They feel like they're going to get this thing back to neutral, and then I think they'll go into spring and just kind of see what transpires here. I think a lot of it is just because of South America harvest. We were talking some wetness for Brazil, maybe slowing their harvest. Well, and that's not the case anymore. They're drying out and they're right on pace, like I mentioned. So I think we're going to see that shift of demand kind of switch over to South America. And still their crop down in Argentina, maybe southern parts of Brazil, got a little smaller. But it's stabilized now. It's still going to be, at the end of the day, it's still going to be a big crop and record or very near record crop if it's not.
On the corn market specifically, and I'm thinking, with options expiration and first notice days and more, and that May contract's going to take over as the lead month here, and many of these grain complexes on the corn side, $5, we just seem to be struggling with that here in the old crop right now, Corey.
Yeah, it is. I mean, the funds did all the heavy lifting and got us up to these upper $4 and got us up over $5. So they always say in our market industry that that was the easy money's been made. Now the hard money gets to be made. But for us to be up in that 510 to 520, like on the May and the July contract, I think was we kind of felt like that was kind of the tipping point where we're going to have a hard time holding that, and we're kind of seeing that now. I think still in the big scheme of it, we may see like the March futures, which are still on the board here for a couple more weeks that we're watching. We may see them pull back to 470, 475, but I look for good support there. We kind of held a little support here today at 480, but there might be one more little leg down in this, but we kind of felt like corn was going to be in this 475 to $5 on the March contract. May call it 480 to 510, and I think that still kind of sticks with us. I mean, these funds, they've got a large position. They're still added to it last week, 350,000 plus contracts long. they're not just going to abandon that here right away. I think they built that up as kind of an inflationary trade. I think they're looking at the overall world carryout numbers, which I've mentioned here a few times, is that we're at the slowest levels we've seen in 10 years. So I think if there's some other concern out there, it's if some of these other countries that typically export corn, if they're not able to, it's going to come from the U.S. and our supplies are getting dwindled down a little bit.
USDA Outlook forums coming up later this week. Don't expect any earth-shattering news, but you can't rule it out when it comes to a USDA report or outlook. I mean, thinking about that, thinking about we've been setting crop insurance price, et cetera, I'm shifting my thinking to the new crop side here. I mean, should folks be thinking about getting a little more aggressive when it comes to marketing, especially on the corn side, Corey?
Yeah, I mean, you look at today's a great reminder of everybody. I've had several phone calls today of guys just kind of a little bit disappointed in this market, and they're feeling like, oh, it's over with. Well, we'll come back, we'll correct a little bit, and probably drift sideways. We typically don't have spike highs and spike lows. We had a nice rally up, but yeah, this new crop, we've got crop insurance is going to be finalized here at the end of this week. Should be around the 470 level on the December corn, around 10,650 or so on the November bean. So some good levels. Especially on corn. Yeah, we do think because the egg outlook form, I don't know if we're going to see those big corn acres. They're more of a outlook. Okay, they're looking for the next several years of potential acres and what we might see. I think come the March 31st report, a lot of the one-on-one conversations I've had with guys, yeah, it's corn acres are going up, and it's just a matter of how high will they get. But 470 corn futures right now, if we do get 95, 96 million acres, there's been some big corn acres. That might look pretty good a year from now, Jesse.
How about the wheat complex? I should ask you about that. Chop it around here, do you think? What's your thoughts across the wheat board right now?
Yeah, I think, we broke out above the 200-day moving average on the Kansas City contract last week. I kind of watched down closely, and we saw some buying come in. It does feel like the funds want to get back to somewhat of a neutral position in that they are still carrying a fairly big short position across all three wheat complexes. I think, just the improved weather, not a lot of damage done down in the southern wheat plain states. I think that just kind of caused the market just to pull back. And when corn kind of sputtered here this morning, they both kind of went in tandem, and they ultimately pulled the soybeans down with it. I think soybeans just felt like they got drugged with corn and wheat here today.
All right. How about over in that livestock trade? Let's talk there. Cattle futures, super strong day Monday, led by feeders up over $4 on the futures. Cash, I know last week was $4 to $5 lower, though, as we had a down week. And so, I guess I'm watching futures. Can we sustain a rally? Can that help cash this week? I mean, what's your view in this cattle complex overall, Corey?
Yeah, the cattle complex, we saw a little, cash has called a little firmer here this week. Okay, we had a nice $1.40 move up in these in the live cattle here, but we also had $14 break as well. So we are due for a little correction back up. However, I think it's going to be a little tough to rally a lot back. So if we get a $14 sell off, if we can get $4 or $5 back, I think we'll be kind of considered to win. We'll probably run into some resistance there. I am hearing some of the retail beef prices like hamburger, which is a cheaper one, starting to come down a little bit, starting to soften a little bit. So that doesn't sit real well with the cattle industry if the retail consumer is starting to maybe ease back on some of these high, record high prices on retail beef in here.
Yeah, and you look at box beef, higher midday Monday, so a good sign there anyway to see box beef trying to stabilize a little bit, I would say. But it'll be interesting to watch that consumer demand, and I think you could rope in pork and chicken and other things into the conversation there as well, just with that broader consumer sentiment and prices at the grocery store. If we start to see a pullback, could some of that get reflected across the broader protein complex, Corey?
Yeah, I do. I mean, the pork is still relatively cheap. Pork prices I'm hearing are starting to creep up a little bit. Some of the products, the bellies are being a little bit mixed in here, a little soft, but I'm hearing the loins and are moving up. So I think it's just a matter of time that this pork, had a pretty big hit last week. Now that's starting to stabilize. I look for, pork to start to rally and maybe beef stays steady, maybe bump a little bit up in here, but I think those two could kind of start to come together a little bit.
Anything in the outside markets you're watching this week, macro-wise or energies, et cetera? Anything else you're watching there, Corey?
Crude oil is down here at the low $70, $70.50. I think, that's not a bad spot for crude. I like the upside in here for, $3-4 possibly. Just seemed like we've been kind of, we get down to some good support, which that is low $70 is a good risk versus reward. If we're wrong, it may slip down, maybe in the upper 60s, but we seem to have some pretty good confidence there. Also, stock market got hit pretty hard Friday. With talk of another variant of coronavirus. So this kind of a grim reaper that, or a reminder that, hey, we're one headline away from, or maybe a couple headlines away from really, hitting a lot of these markets. So stock market down, I think, 700-800 points, whatever it was on Friday. That's just a good reminder of what can happen, especially when we're dealing with these algorithms, these computer traded systems.
That is a great point. Corey, anything final you would mention or reiterate to folks when it comes to their risk management this week?
Yeah, just stay disciplined. We still got great prices for new crop corn. Beans are still a little sluggish, but on that 1050 level. But I think the acres could be big. I think that could support new crop beans down the road. So, I last week I had a lot of guys that were a little disappointed that we had put options on. They had the floor underneath stuff, and now they're a little happier today. So it pays to stick with them.
It does pay to stick with that risk management. Of course, that risk of trading futures and options can be substantial. Want to remind folks of that. Folks can get more info as well at agmarket.net. Corey Bratlin, appreciate you joining us today. Have a good one. We'll talk to you soon.
Sounds great. Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.